Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for coming by today. This stream is about integrating Bookmap order flow tools with auction market theory using the volume profile in the intraday developing time frame. And it's based on structured trades that you can vet to potentially build out a sustainable business. TraderLab is a group of like-minded traders that come together to leverage their experience. Sorry about the delays, guys. I have an unstable situation. I'm streaming from Costa Rica, and I have a dying laptop with a defective motherboard. So it just randomly goes south of the border, even though I am south of the border in Costa Rica on the edge of the jungle. So please be aware if I drop out, it'll take me a little bit to reconfigure, and I will return. If you're in YouTube, please be patient. It does recycle. And thanks, everybody, and thanks, Bookmap, for the backup and support of the stream. Guys, I'm going to be sharing some things with you. Now, this stream today is integrated and is an important part of what this stream was yesterday. Of course, every day the market develops and does its thing, and as traders, we need to integrate the previous behavior to understand what the potential is going forward. So let's assume for a moment that the higher time frame is a bull market. Yet we've had some behavior yesterday and the day before that's set up today. And if you reference yesterday's stream, you'll kind of get a sense of why we would be on the long side primarily today. And of course, subject to your plan, you can trade either side. You can trade aligned with the trend or you can trade counter trend. But for developing traders, I always recommend identify the dominant side, and while you're building out your plan, vet your trades, wait for the trades to show up, and then act accordingly and deploy your risk management process, your trade management process, in other words, trailing stops, and based on what I do here and I've shared in the stream, also targeting potential. And it's all based on auction market theory. Let's take care of business. And remember, I'm in a very unstable situation here, so I'm going to try to keep things. Hopefully, it's not up to me, but I'm going to wish. Let's all cross our fingers together. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. There is going to be a little hole in some of the data here. You will see price, but I won't be able to show you order flow because I lose that when this thing crashes. But I have asked traders in TraderLab to post some screenshots of this phenomena. And if you're interested, you're all invited to TraderLab. There's no cost for it. You can use the link in the bottom of YouTube. And there is no cost for the TraderLab community. TraderLab is about building out the business. So I'm going to say there's no secret sauce, no holy grail, and no special coupon to the buffet. You really have to come in and do the work. And I can assure you that what you're going to find in TraderLab might not be like anything else you've experienced. And that's because this is about business, it's not romper room. So if you want a professional environment and you're willing to put in and take out, because this is the collective leverage of the community, then you're all invited to TraderLab. And you do not have to be a Bookmap subscriber. You will not be solicited. This is about the business of trading. And so you understand, Bookmap offers free education. And why would that be? Because it creates a win-win. If you can sustain yourself as a trader, you may graduate to where you would want to increase your edge potentially with a high-tier order flow tool. What other company do you know that invests in you? Something to think about. This is a very simple overview of what you're going to see in the next couple of minutes. How does the market work? Well, it's called auction market theory. Auction market theory is shopping. You go to the store, you shop. You understand if it's on sale, 10 go in the cart. If it's a retail price, well, you pay it and everybody's happy. Buyers and sellers agree it's a fair price. If the price gets too high, you either have to have it, but there's not a lot of buyers up there, or you buy an alternative product or you just don't buy it. And then the volume dries up on the top side because there's less buyers. And on the bottom side, when you're throwing 10 in the cart, it doesn't stay on sale. So overall, there'll be less volume there. This is the auction. Now, you'll notice when I'm describing how it goes up, goes down, those are the rotations, and that is time frame specific. So subject to how we view the market in different time frames, the market can be in a bull market like it is now, maybe, and maybe making all new time highs or not, all-time highs. But why did it go down the day before? What happened? How do we deal with the rotational aspects of the market? Well, as day traders, that creates our opportunity and risk. We're going to go into how that works. Now, the tool that I use and I found of all the things I did over 47 years of trading is the volume profile. And what is a volume profile? It's that representation of the auction process. What's too high, what's too low, what's fair. Now, the thing about this is it's time frame specific. We can drill in to short time frames or high time frames and see this rotational process. And you need to also understand the market goes up to go down and goes down to go up. Why does it do this? Because it's rotational. The market gets too long. In other words, too many buyers. We run out of buyers. What's under those buyers? Sell stops. So it goes down. And then if the market goes down on the sell stops, we can get new shorts taking advantage of that. And then if we rotate back up, who become the buyers? The shorts, you see. So this is a rotational process, and it's not predictive. We can understand where it might happen if you understand how the market works, and that's one of the things I've shared and I advocate for in the TraderLab, is that traders understand actually how the market works. Because most of us have defined the market by indicators, but I have to tell you, indicators really are, well, potentially can be the reason you do not have a sustainable business, because the indicators are only small pieces, and our tendency is to take random winners because of indicators, and they all have random winners, and try to put them together and tweak and tune so we can create certainty and squeeze out risk. But have you ever considered that's why maybe most retail traders don't succeed? It's a question. So time frame determines the rotations, and the context, which is difficult, is what rotation or time frame are you trading? So the market can be in a higher time frame bull market, potentially going for new all-time highs, but why might you take a short? Right? Well, in your time frame, you might take a short, whereas other traders will exit when that short turns up and wait for continuation longs at a lower level. This is trade plan and skill set specific. And then there's Bookmap. This is really, I call it the tip of the spear. And what it does is it lets me get inside, and I'm no longer in a rigid environment based on time. I'm in an order flow environment where I can actually see the interaction now of the individual participants down to nanoseconds if I choose, and I can see the activity of absorption and other elements that are order flow related. It gives me further insight, and actually, and like everything, you have to learn how to use these tools. It increases my edge, lowers my risk, and yeah, I still take stops. By the way, what is a stop? A personal failure? No. What is a stop? If you have an edge, it's the random distribution of outcomes. The random distribution of outcomes is like gaming, and it is not a failure. What it is overhead and cost of production. So how do you experience a stop? Now, let's go to the higher time frame. It's very important. Now, I'm going to review quickly what has happened and what has given us our opportunity and risk. Now, this is the day before yesterday, and going up the day before yesterday, this was our primary target, and this is the all-time high. So going for the moon, Alice, except what happened is, now let's come back here. Sell stops are here. Longs are in the market. Going to the moon. Continuation buying. Going to the moon. Target. All-time high. Going to the moon. What happens? Well, we had something which is very interesting. It's called the neutral extreme day. Now, the term neutral means we took out the first hour's low, and I'll show this to you, and the first hour's high. So we had so that means both sides are active. However, for me, I was looking for the all-time high. And when I say looking for it, it's just a target. It doesn't mean it's going to do it. That's not my job. My job's alignment. So, and I was looking for something, if we broke out, called a neutral extreme day. In other words, that we break out, and this was on Wednesday. Okay. So instead, we ran out of buyers, and then the longs that were in here and the longs that are in here got basically thrown under the bus. Why does it do this? Market goes up to go down, and the market goes down to go up. What was here? Sell stops were under the buyers in this up here, and sell stops are in this leg for the longs in here. And then we get the extreme day. Now let's continue. What does this all mean, Tom? Here's what it means. So this, and you'll remember this from the top of the stream, and I encourage all of you to watch yesterday's stream to see how the market works, why it does what it does, how you can get in alignment with it. And if you come to TraderLab, how you can build out a trade plan and then understand the potential, not what will happen, don't we wish? That doesn't exist in our business. What might happen and where. If you could understand what might happen and where and why, does that give you an advantage over other traders who have no idea what's going on? And you're going to take stops, so we have to get over it. This was, now this is was the target I showed you, and then the new all-time high or whatever. And we ran out of our buyers, and then we took out the longs here and the longs in the previous day. And then we came out the bottom, and it created an extreme. That extreme, basically, so I'll explain it to you. This is rotation, so up, down. This is balance. It's called balance. The high volume or retail price is right around 90, 75-ish. And that's called the naked volume point of control. When we broke away, we fell out of balance, and this becomes a trend. So it's a failure. So now it's everybody out. Ever see somebody yell fire in the theater? Everybody leaves. Well, it created this. This is called a low volume zone. And these are called singles. Now, singles are based on internal gaps in a 30-minute time frame. And this is something from the days of market profile before we had volume. So the market profile is only these levels. Now, don't worry about it. The volume is this. And this is like newer because when I learned this, we didn't have volume. We just had time. So, but what does this say? Let's come back to the language. This was a target, potential to squeeze and go to all-time high, ran out. This is the fair price. See you later, Charlie. And what's down here? 44-ish. A previous fair price that we left behind. And something else. Sell stops. Let's go further. I hope you guys are getting something out of this. By the way, if you're visiting YouTube, remember if I drop out, it's because I'm in Costa Rica and I have a dying laptop which I cannot replace. I will return. Somebody said that in the Philippines, wasn't it, MacArthur? So let's look what happened. We went down, and this was our downside target. It was, and we went under it, and we came back above. This is a micro structure. And think about that auction. I'm not paying that. Yeah, but it's on sale. In a higher time frame, this was support, which created our up leg. Remember the big up move. Longs in the market. Failure, extreme day. Now there's our singles and a low volume area. So on this day, and if you watch yesterday's stream, this was the target coming up. But there was another piece. We could sell this to rotate. So it was a rotational trade. So if you're only looking for longs, you're only taking a long. If you're trading two sides, you could have sold this and do this, get long here and do this. It's a reversion day. It's called balance. The eventual targets was here. And you'll notice we got there. This is called auction mechanics or market behavior. You can learn this in TraderLab. And again, we can't predict a darn thing. So don't think you can walk in here and go, oh, it will do this. The best you have in this business is maybe. Well, it might do this, it might do that. But you can learn where. So where did we go? Remember, this was the extreme day. We had our singles. We came down, hit this target. And then what? Well, If we come back into the singles, and now what do we have in the market? Shorts were in here, and the shorts were in here, target, and now the fuel is continuation up, squeeze. Next target is around that 95, wherever it is, up here, and then potentially all-time highs, today or never. Is that making sense? Let's go further. Now, this is the ETH, and we had a report 730, and this 86 is a level, and 95, I think, was the important one. Let's just keep going. So this is, let's see what we have. This is today. So yesterday, we got into the low volume area. Okay, shorts are in here. This is called value area. I will reference it and explain it to you. The target from the day we did the Acapulco cliff dive was here. The next area is here, and then all-time high, and who knows, I can't see the market. Now, these are some screenshots. I had a data, I crashed. These are separate, and I can't go back to them, but I asked traders in TraderLab to post. These are trades I narrated, and this is a long, by the way. This is called mean reversion. I can't get into it too much. I'm just going to say this is how you could couple an order flow trigger right here, and this is a trade to there for a scale, and then continuation higher. Again, order flow, and I can't get into it, but I thank the guys in TraderLab. And this is another one, I believe. Yeah, the 60. This is another one here. I think, or I don't know what time. I'm sorry, I can't reference this, but I believe this is another long, but I can't say. Don't know. Is everybody with me so far? And remember, hold on. I'm trying to get back to YouTube. If you have questions, please post them. I'll do my best. Please give a like if you find this interesting. This is the TraderLab. This is the business of trading, and you can learn this. Now, RTH open. Now, I'm missing data, so you'll have to forgive me. I have price. I have volume. I don't have order flow. So I'm going to have to abridge this. But let's start. This is market mechanics. So what do we know? The market went down. We have the shorts trapped from the Acapulco cliff dive. Yesterday, we went into a rotational trade, and we were looking for upside. By the way, I forgot to show you one thing here. I got to show you something. Now, this is the auction, if I can get it back. Here. This is yesterday. Let me come back and show you. This is how the auction works. Remember I said shopping. If we get too high, we run out. I'm not paying that. If we get too low, and this was our target, and we can go lower, it doesn't matter because there's stops under here. I call that fuel. If we get too low, the market doesn't spend time. It can rotate. So you'll notice there's more volume here, and the highest volume for the day is here. That's called the volume point of control. But here's the secret sauce, and there isn't any. Do you notice what's happening here? You see this taper at the bottom? That suggests we're spending less time because there's less volume. That's saying is that the buyers are here, but the market there's less volume because we're not spending more time. We're spending more time and we're doing more volume here. The way the auction works is it is saying in its language, most of the buying and selling is here, and the highest volume is there, the retail price. So what is the language? This is where volume profile comes in, demand. So that tells me that subject to my plan, this is a target area because it's not auctioned. You see there's nothing there. And if I get there, it can rip. That's what it did. Now, I can trade this from both sides. And in the stream yesterday, which you should watch, I was short in the morning here, coming down here, whatever, coming down here, wherever. In fact, the first trades in the morning were shorts. But what else do we know if you're in TraderLab? If we get shorts in here and we get the stops below here and nobody knows where it's going to go, part of the thrill, I can trap the early sellers and these guys. And now I have a target up here. But this tells me right here that longs have the edge. And it's not a guarantee of anything. This is the auction. This is how the market profile and the volume profile can maybe give you an edge at times. Is this making some sense? Are you getting something out of this? Now, based on what we know, here, what do we know? Let's come back. Where did most of the volume take place yesterday? Well, there's yesterday's low. This is the highest volume I just showed you, and this is called the value area. Value area is where 70% of the volume took place, okay? Is everybody with me so far? That's that fat place of acceptance, and we curved inside, and the low was too low. Is everybody tracking? The retail price, or highest volume, naked volume point of control, and they're called points of control, go to the store, is there. So we were rotating, and this is the fair price. Let's keep going. And now, what? Fair price from yesterday. Where's the ETH low, guys? Can you help me with that? I might be covered up, or who knows. ETH low. TraderLab? $54.25. This is the ETH low. Let's look at this as good shoppers. Is that right? 54? Really? Okay, so this was the low price. What do we know? Before all this is before the market opens. What I showed you at the front end of the stream is what's called trade preparation. I need to know. What the condition of the market is, who's trapped, and I've given you that overview. This is part of trade plan. And it's a bull market. Why wouldn't you use wipeouts of the week longs who think primarily, depending on time frame, of long continuation trades? So if you never took a short, you could just be waiting for longs, subject to time frame. Now let's come back to the story. The story is 70% of the volume took place between here and here, and it's kind of compressed here, but you can see it's 55, about 10 points, and the retail price is here. There's about a 67% probability we'll get there. Who knew? And anything can happen, so we're not in that. There's over 90% probability to check the ETH high or low. ETH high, ETH low. The previous day for that, when we did the Acapulco cliff dive, this was the highest volume that we fell away from. Let's look at the ETH. ETH high? That's too high. ETH low? Value area low. Maybe too low. Which one, Tom? I don't know. Yesterday's high. What do we know? About an 80% probability to take out yesterday's high or low. Yesterday's low. ETH low. Is that too low? I'm putting the case together for longs. Do you see what I'm doing? Doesn't mean anything, or does it? It means maybe. So, over 80% probability yesterday's high or low. ETH low, maybe too low. Yesterday's low is below us. Why didn't we go there? I don't know. This is the fair price from the Acapulco cliff dive. Maybe too high. High probability, trend up to go there. What else? You'll see. Stops are right over here. This is the high of the day. We did the Acapulco cliff dive. What else do you have? All-time high. What's our target for the day? Top of the stream, all-time high, and then you wear your helmet. Is everybody tracking? Thanks, Fan, for that. Are you guys getting something out of this? Now, let's look. RTH open. Let me get to my context grid sheet. Oh, really? Not ready to trade yet, Tom? Close. Open in range, where? Outside of value. Value's 70%, and if I open out of value, in the world of the profile, in the auction, remember this is auction market theory, we are potentially rejecting this. It's too low. We are opening out of balance. Out of balance means this price might be too low, right? So we're opening in range, but not in value. The market's slightly out of balance. So what can we anticipate? Well, in a bull market, I'm going to take a wild guess, up. How do you do that? Now you bring it down to a tighter level of the same concept, but in different time frames. Think of vertical integration of time. You think of time frames. Well, I understand. But when you get down in time frame, now you're trading rotations. Now, what I showed you at the top of the stream is rotations in a higher time frame. Now, as day traders, we're starting to come down in time, and it's not clock regulated. Once you get into the intraday time frame, now you can use anything you want. My thing is I did everything you do, okay? And you guys are still doing loads of the things I did. But I don't think of the market in intraday as time oriented. It's behavioral based on the participants. So I'm just giving you a sense of philosophy and experience, not saying it's what your truth is. It's only true for me. There's no stopwatch or no guy standing on the edge of the pit, as it used to be, saying you got to wait 5 minutes, right? Boom, push the button. Now we get a 5-minute bar or a candle. It doesn't work that way. The rotations are based on the interactions of the participants. That's what creates the rotations, not the clock. So I use order flow and Bookmap to see the rotations, because when I see this, I'm seeing absorption. Sellers, it's absorption. Why did the market go down here? As an example, these buyers were absorbed. What's the time? Do I have to punch a clock before I can recognize behavior and stay in alignment? It's just a point. It's not a criticism. It's just something to think about. So now we're in the RTH open. And again, I'm missing data. I do have the delta and I do have the auction. I do not have the order flow. That's missing up until I could restart after the crash here. And again, if I drop out, remember I'm in Costa Rica, and my chat GPT, when I gave it the symptoms of this laptop, said, failure imminent, replace now. I figure that's very reassuring. So let's look. Now, we had a bullish report, and we actually had a long in the ETH, which I can't show you now, but it was narrated in TraderLab. By the way, you guys remember, you're all invited to TraderLab. There's no cost for it. And all of this is posted in the stream. There's screenshots, and it's a terrific community. Okay? So let's watch. So right here, we are opening out of value, and there's a couple possibilities. One is, because of yesterday and this open, we can look for longs, and there's over an 80% probability to go here, right? So if I have over 80% probability, the first hour is high or low, and all-time high, and shorts in the market, I want to lean to the long side. Now, I don't have order flow, and I don't remember these, but they are posted. Let's see the trade. I cannot go back on these because I can't see the order flow. Now I can see this. This is absorption. And I can't really say this is this, this is that, because I don't remember them. Guys in the TraderLab, traders remember. This right here, let me just see if I've got what I need here. I can't tell. Guys, is there a VHVN at 73? Come and take a look in TraderLab. Was there a VHVN at 73 at the open? Okay, thanks, Marty. Okay, so what we have here is absorption, break high, and we have over an 80% probability, past performance not indicative of future results, to get here or the low. Me, go out on a limb, say the long. Now, this, and I don't have the liquidity. Guys, was this a long that I narrated? I can't remember. Is this was this a long? You're saying there was a VHV in there? Guys, can you just give a quick answer? I don't want to burn up the stream here. Is 71.75 a VHV? I need that, and I need it quick. So just quickly put it in yes, no. Yes. 71.75, they're posting charts. Well, according to the gang, this is a long because there's a level right here. So here's your absorption. Here's your buyers. I can't show you the order flow. And right here is a trigger, and this is the scale, okay? And then we're going, wherever. Let's watch. That was the first long. Now, this is interesting. And I believe there was, let me look a little bit. This is a sweep. Now, when you get a sweep, the possibility, 78.5. Yeah, I can't, here's the possibility, upside rotation. Sweeps are very useful if you know how to use them, and nothing stands alone. This is order flow phenomena. If I get a sweep here, this is going to be resistance right here, because of high volume. Let's remember how the auction works. This is like your mini mart, because this is broken down by, as you think, time frame. To me, there's no clock. It's the behavior of the participants. So when you get this kind of thing, too high, too low, and that little high volume out there, right there, is a retail price in the store. Remember, shopping. And if it's too high, I can leave it. Now I get a sweep. And again, I don't have order flow, so I can't tell you. I can tell you this. This is resistance now. So let's see what it does. I don't know. See? Now, I don't have the order flow. If we had the order flow, you would also see the book. So this is how you might use this. Right here, this suggests to me, and here's what I know before it happens. We found maybe too high. Again, no clue. I see this. That suggests a rotation up. This is resistance. And of course, and now, what do you do with this? If you're aligned with the higher time frame trend, it's a trade management opportunity and an exit. If you're trading counter trend, you take the short. And I advocate for developing traders, I'm going to say firmly, that you only trade one side so you could learn to become competent with the dominant side. So this would be an exit for longs or whatever your plan is, okay? So everybody with me? Okay, so this is a potential exit, in here. This is your wake up and smell the coffee moment, because the idea of this is the counter rotation. And then either we're going to take that out or it's an obstacle because the shoppers found too high. I'm not paying that. And then either we get through it or come all the way down the range. And why might we come down? Let's come back to the concept. Market goes up to go down. Market goes down to go up. If I find too high, what about the buyers in here, in here, in here? Sell stops are where? There, 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 and the low of the day. Let's see what it does. Now this is very interesting, and I believe I narrated this, and I can't remember. Watch this. Now, this is a sweep. And what do you remember from the sweep? Potential counter rotation. What also is this? Hopefully this is accurate. 71.75. If this becomes too low and I get my sweep and I break high, then I have a possibility, if this is too low, another sweep for a long, maybe. See, I don't have order flow. I could be completely all wet here because I can't see the book. Yeah, I can't tell. This might be a reversion. Oh, this is here it is. This is what I want to show you. Let's come back to what we know. Let's come back. Now I narrated this in TraderLab too. I don't call trades, guys. I'm as clueless as everybody else as far as predicting, because I don't. But what I do understand is how the market works. So I can't predict. Here's what I do. I know typically where behavior might happen. I don't know what will happen at the location. So if this is too high, remember that gives us this. Now, this is the microstructure. Now, when I come down, this yellow line at the time is where the highest volume is so far in the daily developing time frame. So this yellow line is the same as that, except this is a shorter time frame. Is this making sense? Apologies again, because I'm missing data here. So now, if this is too high in the little store, let's keep it simple. You know, why make this complicated? Then in the higher time frame, developing, this is the retail price. So in a little store, if this is too high, this is retail. So if I come back here and I find my buyers again, is it possible that if this area is too low, I'm going to come back and check what was too high? So it's kind of like, you sure about that, Tom? Yeah, I don't want to pay that. This is how the market might work. It's reversion. And I always say the thing to learn in TraderLab is with something called mean reversion. And what is this? That's the mean. Very mean. And there's my sweeps. So my sweeps are here. My sweeps are here. There might have been liquidity here. I can't remember. And so I have an incomplete picture. So let's look. There's my buyers. Here's resistance. Going to zero. Sweep. What about here, Tom? There's a sweep. Do you get long there? No, I don't have a trigger. Do you see anything? No. What about this? Sellers are there. Buyers are here. Break low. Going to zero, Tom. Sweep. Now what? Buyers are here. What happens here? Well, depending what was over here, this is an area to look at, and my resistance is up at that level I was pointing out, which was up here, right? Here, I'm sorry. This is a target. If I get long here, which is a structured trade, this is a price, right? But this appears on me. There, that is too high. So if I get long, this is my scale. Right there. If I get long here, this is my scale. Okay? It's resistance. And what's above? Don't I have another piece of resistance right here? Right in the volume that was over there? I'm trying here to get you a good picture of this thing. Then we do the Acapulco cliff dive. Okay, now what? Well, overnight low is here. So that's a target. Value area low is here. That's a target. And coming down, this is a target. Oh, it's over. Terrible. Oh my goodness. What do I know? Too high, retail. And now what I've done, let's look at what I've done. Longs are in here. Longs are in here. Longs are in here. There. Too high. And now what do? What does the market do? Market goes up to go down, goes up to go down, goes up to go down, goes up. And any one of these ups could keep going to the next target, which is there, or go down and take out what? The weak longs. If we take out the weak longs, and right here, by the way, is a suggestion of failure, by the way. This suggests the up rotation, and then we get our failure, there. This suggests the up rotation. That's fine. We want to be long. This suggests an up rotation, and it fails. So you can kind of see when I'm looking at sweeps, I'm looking at up, these sweeps. And when I get it here, I'm looking at up, I get down. That's a failure. So then everybody gets thrown under the bus. Thanks for playing. They get a coupon to the buffet. Now let's look again. Again, I don't have the order flow. I remember 60 being a long. Isn't that right, guys? Didn't I put a comment about 60 out here as a long? It was an order flow trigger, which I can't show you. I'm going to show you the price action. I can't show you that the liquidity was resting, came in at 60. Was it 60? Yes? Okay, thanks. Let me show it to you. I can only show you a piece of it, not the order flow. I'm going to show you pieces of it. So sitting right here was resting liquidity. Oh, this is nice. None of this is in here either. The limit order book. So resting liquidity are icebergs, passive. So here's my sellers going to zero. That's aggressive sellers. This is my naked volume point of control. This is the ETH low, teeth chattering. This is value area low. And let's remember what else. Yesterday's low is below me, and I haven't gotten there. And I know there's shorts in the market. Now when I'm coming down, I know there's shorts in this leg. So if I think we're going to maybe take out the all-time high, and that part is, I'm not predicting, I just know structure and that the market is short now. And I have shorts in this time frame, as you call it, and I get an order flow trigger, which is right here without the order flow, only pieces, delta. So let's look at delta. These red bubbles are aggressors, and they're sell stops and whomever, shorts, but that's market orders. Market orders are made up of sellers, aggressors. Well, that stops become market orders and shorts. Okay, going to zero. Okay, what happens right here? Let's come back to the store. The mini mart, remember? Where's the mini mart? Now at 60, I have order flow. And I don't know if it's in here at this time or if it comes in. So right here's the first suggestion that there might be change. Why? Look at the auction. I'm not paying that. Yeah, but it's on sale. Retail. This is your lemonade stand. Break high. Where's the last time you saw break high? Change. And what was here? Sellers. What's there? Buyers. That's what creates this rotation. This is a micro consolidation. The high volume is the fair price in this little lemonade stand. Don't be insulted. Break high says this price might be too low. If I break high and I see my buyers, aggressors, then where was the last place the sellers were? Wasn't it right there? If that's the case, that might be support. Then I have my order flow. Break down. And the order flow I think was here. Watch. If I break above the order flow, 60, right here, I can buy it. and then I'm going here. Now, this is an advanced concept. I only wish I had all of it here, but you can see the price action in the auction. You can see the profile. So I got a lot of it, except, the other parts, which are really material. So this is a long, and you can see the buyers are back here. So this was a suspect. There's my aggressors. These guys where the sellers previously were. That's why you see the down move. And the buyers are here absorbing. Who knew? Change, support. 60 is here. Sellers, they're right here. Break high, order flow, trigger, long, there, target here. This is called mean reversion. That's a trade, and I threw it out there in the TraderLab. Now, you're looking at this and going, what is he talking about? How does he do this? Well, good question. It's not complicated, guys. You just have to understand the market, how it works, not what it'll do. The other part about this is knowing where it might do it. That's the other part. So now let's look at this. We got something else here. So you know about the long at 60. Now let's come back to what else we know. ETH high. Why might we think about the ETH high? Well, we didn't get the ETH low. Didn't know at the time, except I had a long here. And then you put your helmet on, take your stop like the rest of us. Don't want to take a stop? Trading isn't for you. Oh, I didn't mean that. You don't want to take a stop. I don't want to take a stop. Are you willing to take a stop? Because that is the cost of production. Find a business where you don't have overhead. I'll buy it. In the meantime, I have to accept that there's no way to predict outcomes. There's edge. This is a business. It's a gaming business. So if this is my long, this is called mean reversion. I'm reverting to the mean, and the mean is where the highest volume is. Remember the shoppers, right? Oh, it's on sale, Tom. Fair. Now, if I break above it, and I'm in a bull market, and this is my next target up here, and this is the retail price that was too high when we did the Acapulco cliff dive, that's where I'm trying to go, right there. And 90% probability plus to go there. So wouldn't I be aiming for it? So long, scale, mean reversion, risk neutral, stop stays wherever per your plan. You put your helmet on, and now we get a sweep. This is a buy sweep. Well, what does it mean? Potential for counter rotation. Let's watch. Target. So there's another piece here. If I get VPOC migration, remember, VPOC, I made these terms up, and I made this whole thing up actually many years ago. I thought I was out of my mind, and because I saw phenomena, and I wanted to figure it out. And so I created this for myself, and I called it VPOC migration, and I called these variable high volume nodes. A variable high volume node is a place where it was a shopping experience. So it was, this is what the fair price is. But what happens if we do more volume at a higher price? Doesn't that mean that the value of the product might be moving higher? Right? And if the value of the product is moving higher, and I accept it, and I hold this, and then I get a new fair price, and I hold this or this, then this might be too low, this might be too low, and I can continue, which puts me on track for what might be too high. And if I break above it, now this, by the way, let me explain this one to you. This says the potential for counter rotation. It's a sweep. But what do we know? Same thing over here. I get a sweep here that suggests up, it does the opposite. What can I do with that? Well, if it fails, I can hit the eject button or basically follow my plan. But this is the opposite. This suggests counter rotation. I do the opposite. What does that say? Too low. Watch. Now, Watch. Now, you noticed this, and we went up. Now, we notice, watch, this sweep, but this one might go up. So it doesn't say it's over, but my teeth start chattering. I also know this is a recent high from where we did the Acapulco cliff dive. The shorts that were chewing up where our buy stops and new buyers have their stops here. So if I'm going for targets, this is the next target right here. Who knew? Now what? So I'm going up. This suggests higher or exit, subject to your trade plan. Support is here. Why? It failed. This says potentially higher. No clue. But what about this? Isn't that the same as this? And what was I anticipating? Rotation. Well, let's see what it does here. Now I got my liquidity back. Isn't that nice? You can see where it crashed on me. I was very ecstatic about that. Now, these are icebergs and stops. This is resting liquidity. Let's look how this works with order flow. So right here, I see the order flow coming in and thickening up. That's the limit order book. Those guys are looking, well, maybe to sell, or maybe they're spoofing and whatever. You see the icebergs. They are absorbing the buyers. So when I see delta and icebergs, that's the limit order book. So basically, these are sellers, and this is like Pac-Man. If I got more sellers up here, they're going to absorb the buyers. If the buyers have an appetite, they will absorb the sellers and keep going. Which one is it going to be, Tom? Tom doesn't know. So Tom doesn't know anything. He only knows one thing, and that's maybe. Maybe it'll do this, maybe it'll do that, maybe it won't do any of it, and who knows. So what do we have to do as traders? We have to know we don't know, and we have to look for hints, and we have to try to read behavior. There's my sweep. I'm looking for this, right? Continuation. I got my liquidity. So, and I have targets above. So hanging out here, teeth chattering like you. Same. Watch. Sweep, I think. Here, let's look. Sweep, liquidity. See it, see it, see it. Now, right here, the antenna is up and the alert is on in the brain. Because what happened? Order flow. You'll notice how this pulled. You know, this really didn't trade out. This came in, and I have my buyers here. And as far as I know, keeps going to keep going. And now I have a sweep. This is an alert for me to pay attention that I might get a reversal or at least a rotation. Let's watch it. Notice the book. So where's too high? Potentially, my last buyers absorbed here. My sellers are here. The buyers were absorbed there. So I got sellers here. Why is the green bubble? Buyers. Why didn't it go up? Sellers. That's the only reason. What about down here, Tom? Buyers are there. Buyers are there. Why? Sell delta. There's the icebergs. So you got a buyer and you got sellers. And it's like, what's it going to do? Sweep. Warning Will Robinson moment. Break low. Now what? Resistance is there and there. Let's just see what it does. There. Who knows? By the way, I have no clue. Don't think I know, because I don't. Okay? Now, what is this? What do you do with this? If you're following the trend, right there, this is where, if you're in TraderLab and you do the work, you would learn that this is a material event. You would also know you don't know what's going to happen next. You do know that the sellers took over. The buyers were there. Sweep is there. The sellers are there. The buyers are there. break low. This is a trigger in the TraderLab. And right here, if I could draw a line, which I won't do because my computer might, the little hand comes out and slaps you. Where's my buyers? Now my buyers are there, but my buyers were here and my sellers got below them. So that's the trigger. This is the test. Test. Why didn't we go up? Sellers, you see, absorption. Break low. What's happening here? This thing is breaking down. Break low. Where is my resistance? There, there. Now let's come a little lower. What's happening in here? Volume is in here. Break low. Another trigger. It's telling me in the language of the market, and the order book is coming down. It's like the invisible hand, except with Bookmap, we can see the invisible hand. Pressure, pressure, push. Too high, break low, trigger. So I'm getting sequential triggering. What is it saying to me? Me? Hasta la vista, Tom. Get out of Dodge. It was a nice trade. We'll get you next time. Okay, now what? Down. To where? Clueless. Watch. Now, another trade sets here, I believe. Guys, I narrate this for you. I think I did. Don't remember. Yeah, this is a long. Let me show it to you. I think so. Did I post this one, guys? TraderLab? I guess not. TraderLab, I'm not seeing any response. Maybe things aren't working. Was this a long that I narrated? I thought so, but I need your help on this. This is the sweep. This is the retail price. Now I know, and I'm outside of yesterday's range. I do not remember this one. Oh, okay. Mean reversion. All right. Thank you. Yeah, this is a long. Let me show it to you. Now, again, these are structured trades. You can learn them. You got to vet them. I take stops. You take stops. So we got to get over it. There's my sweep. Remember where I see the sweep and I get the buyers. I come down again. I'm at yesterday's high. I'm still out of range. I come down again. VPOC migration. What does this say in the language of the market? That might be too low. Variable high volume node. So the way I look at it is it's shopping. Well, this is too high, right? Well, yeah, but the trend is up. Let's see what happens here. So here, we have our order flow, we have our liquidity, we have our sellers here, and this, we have our buyers here. And that is the sweep that suggests the rotation. I get my sellers here, VPOC migration, and this is a trigger. Sellers, again, it might be too much, but I'm just going to show it to you. This is support. Right? New retail price. Now, what can happen here? I rotate up. This is support. And this is where the trade would fail, under here. Why? Because my buyers are here. Then where am I trying to go? Here, because I had my sellers. That's a trigger. So this would be your scale coming back up right there. And then either it's going to continue or fall on its butt. Let's see what it does. Support's here. Variable high volume node is there. Come out here. Absorption is here. Order flow is here. Variable high volume node is here. I see my buyer. Watch. It's also a long, but now if you don't understand these trades, I understand you don't understand. And these are not, this is not where you walk in and you just go, oh, this is so easy. No, it's hard. What is hard about it? The randomness of the rotations. So if you understand how the market works, you can anticipate behavior. You don't know where it'll happen. So you have to have structure that you can read. And what is this thing that you're seeing me do here? It's a language. It's a foreign language. It's like learning to speak a foreign language or play a musical instrument or dancing at a high level. So whatever it is, it's fluency in language. Now, when you're learning a foreign language, think about what you have to do to learn. You're incompetent when you start. We all are, whether it's trading or anything else. We are totally incompetent. Then if we can find a process that we can relate to, then we have to start breaking this process down so we can learn a language. That's going to take intentional practice, frustration, and commitment. When you want to get fluent in anything, you have to put the time in. And you also are going to have to tear down the things you do that don't work. The fallacy of developing retail traders is the randomness of things that work. I always refer back to your higher time frame software toolbox. Open it up. I don't know, there's 100, 200 indicators in there. What do you need 200 for? Here's the answer. They all have random winners, and I'm willing to go on a limb and say none of them have an edge. So that means you're always going to have random winners. Gamblers have winning hands, but they lose money, right? So if gamblers lose money, do you understand if you're a gambler or not? And if you're mixing indicators to create certainty and squeeze risk out, you're a gambler. And you're going to still have winning hands or winning trades. You're also going out of business. And the proof of that is over 90% of retail traders fail. And they just continue doing the same thing, trying to fix a defective process. It may not be your effort. It may be your process. You need to think about that. Because if you're waking up a trader Groundhog Day, working hard and getting the same result, it may not be you or your effort. It may be your process. What do we know about this? I'm not paying that. Break low. What do I know about this? Buyers are here. What do I know about this volume in here? Let me show you. I can just take this piece by piece and show you the auction. This is kind of what I do, and I have no idea. I'm not saying it's any good. I'm just saying it's a way to do it. So this little volume here is too high. This was a target coming up, remember? If I break, and I would anticipate this liquidity is sitting in here, that I could get a rotation, or it's the end of the move. I don't know. Break down, profit taking. Then I have volume here, and in the microstructure, I have volume there. Too high. Sellers. But who are the sellers? Aren't as a profit taking, maybe? And where are the stops again? Let's not forget what we're trading into here and there. Who knew? And who knows? So all we're doing is looking at longs. Let's keep going. Buyers are here. Sellers are there. If I break above this volume and this, where the sellers were, can become what? Can it become support? Isn't this support? Now, at 9:30 Central Time, we have something called the IB. And the IB is the first hour high or low. And this didn't get set till here. So we have a structured trade in TraderLab called the IB continuation trade. However, you need to understand something. Trading is not mechanical. You also have to be aware that we have this rotation. And what do we remember about the way the market works? There's longs in here, and they're all trailing their stops. Isn't that wonderful? What do we do about this? We have a trade in the TraderLab called the IB continuation trade. It would be a long for continuation higher. But let's look now. And everything works randomly, naturally. Look at that. And let's come back to what else we know. Stops are here and here. So we're going for this, and whatever happens with that, but we're going for that. And going for it doesn't mean it's going to happen. The market rotates. Now let's come back to the profile. What do we know? We know the ETH, we're over the ETH high, which is from the last auction, the ETH. We're over that retail price when we did the Acapulco cliff dive. So we're outside of the range, which this is yesterday's high. So I know that if I come outside somewhere, I can then mean revert back here. You see? So mean reversion is the key, I think, to the kingdom. It's a personal belief because the market's always auctioning. So what happened here? Too low? What happened over here? Too low. But what else do I know? There's stops there. There's stops here. There's stops here. So let's just look at the behavior. Now, let's remember the concept. Fair. I'm not paying that. And where's the outside? This is the thrill. Well, this comes in here. This is that hand, the invisible hand, unless you have an order flow tool, that presses, skews the book. So now the book is being skewed, and the sell stops are here and here. This is like a double bottom. This is a weak structure. And then I have my support right there. Okay? And I got liquidity coming in here. Let's watch the behavior. And now I'm putting pieces together, an outside edge. Now what I'm going to try to do here, and this is difficult in the sense of where is the outside edge? You're going to say, Tom, how do you know where it is? Here's the answer. I don't know. I know the behavior and I'm looking for the trade, but it now has to meet my parameters. There has to be sufficient range to come here. This is going to be my scale, the high volume, the retail price from here. I'm looking for an outside edge for mean reversion to come here. And the reason also is I have stops above me as targets. So at last place I know I had buyers was here. And look what's over here. Let's just see what happens. I don't know. Clueless. What is that, Tom? How about a long? And where am I going to scale? Here. VPOC migration. New retail price. Key. Watch. Fuel. Target. Everybody with me so far? This is the TraderLab, and I apologize again for so much of this information missing from Bookmap. I have a computer that is, it says finito, you're out of here, and ChatGPT says failure imminent. I like the word imminent. Replace now. Gives you a great feeling when you're at the edge of the jungle in Costa Rica, and it says hasta la vista on the computer. So it just fails randomly. It doesn't do a blue screen. It doesn't even need to do that. It just goes dead. So that's why I'm missing stuff. But you do, if you want, and I suggest you guys do this, watch yesterday's stream because it sets up today. That's the beauty of trading. It is a sequence of behavior, market mechanics, and subject to the tools you use and your understanding of how the market works, you can develop a plan. The idea, in my opinion, I'm only talking about me, is not to trade a lot, but to trade rotations and swings. Why would you do that? Every time I trade, my risk is pretty constant. If I trade more, this might be a shock to you. I take more risk. How about I trade less for more range? Because that pays for the stops I will take, just overhead and cost of production. So how do you create profits in this business? Well, you got to find your groove. Your groove being is what rotations and what speed can you process comfortably as you're developing. You have to become proficient, and proficiency is not activity, it's anticipation. So when I'm looking at this, because I understand the language, I know what happened over here. And when this comes in the book, I also understand that those are buyers. There's the icebergs. Just like I understood when this came in the book, it was going to skew the book. If I understand, why did this happen here? Is it possible for this astute group of traders that when this came in, no intention of selling, their intention, it's like a catcher is sitting down here, and the sellers are the stops. You can see them here coming out. Thanks for playing. And when you get sell stops, the icebergs can take the other side because they need the liquidity. They're limit orders. So as the market's coming down on the poor retail traders who are micromanaging, and fine, we all do, who are the buyers? They're there. Now, if I understand that this store, this auction here was where my buyers were, my buyers are there, my sellers are there, I break high, suspect, hold the volume, break high, hold the volume. This is a long continuation or a trade management structure. And then when I look out here to the left, I see stops there. I see, stops are all over the place here. So where am I going to get long? Well, I'm going to look over there. And what else do I know? Let's come back. ETH high. And my previous target, the retail price from the Acapulco cliff dive. I'm tying the pieces together. Auction market theory. Is everybody here? Is everybody with me? Is this making some sense? Please give a like if you're visiting in YouTube. This is auction market theory. This is the TraderLab. You can learn this. And now when I say you can learn it, this is advanced trading methodology. This is where the rubber meets the road in trading. This is what trading is in the sense of market mechanics. So in the TraderLab, you need to understand how the market works. Why does it rotate? What fuels the rotations? How can you take advantage of it? How can you manage it? How can you anticipate behavior before it gets there? And I have to say the word. There is no prediction. It's anticipation. Just think of the Heinz ketchup bottle. We anticipate where the market might go. We wait for structure. We have vetted triggers, and we understand nobody can pick anything. But if I understand that I have fuel, buy stops sitting here, or buyers built in, and if they are short, the market is short, what might happen on counter rotations? Might we have built-in buyers covering on counter rotations? Have you thought of that? And might we get continuation buyers like us on these counter rotations because we're trading into the stops? Is this logical? Now, if I get long here and I get VPOC migration, what is the language of the market? Tom, new retail price. What is this? Pressure, pressure, pressure. What about this, Tom? You told me there were sellers there. What happens here? Let's look. I get some sellers, and when this is Pac-Man, the buyers, remember Pac-Man, overwhelm the sellers. Now, I haven't seen any of this. Now, what is this? There were sellers here. What's this? My sweep. What do I anticipate? This. What is this, Tom? Isn't it support? Right? Order flow trigger. Thanks, Jim. Order flow. This is a TraderLab advanced process, never a recommendation. This is a advanced order. You could learn this. Now, when I say advanced, you don't need this. You need to understand why. You don't know why. That's why you have an open invitation to TraderLab. Wouldn't you like to know why this is a long? And why? This is where we're going. So subject to your plan, you might just be sitting in your Barca lounger, and when this happens, you can trail your stop up. This is the last long if it's in your plan. This can be a support. This shifts up. It's going to do either that or that. Stops are here, so we're going there. And when I get this and I get this, I'm still going there. And my stop can now be here or under here. And why you see the red bubbles? Sellers. Who's buying them? Icebergs. Where would we look at it? This is called an order flow trigger, and it's an order flow phenomena. Now, let's just watch. Isn't that ironic? Where do we come back? And remember, I haven't seen any of this. Is this interesting to you guys? Long. See? Are you guys tracking? You getting something out of this? Jim is asking me, do I always scale half my position to become risk neutral? I have to say that's subject to stats. I think as traders develop, see, it's kind of, Jim, it's a sequence of learning process. When we're vetting trades initially, the first key metric is what's the probability of covering your stop on your runner? And it's basically a two-lock configuration. The idea of TraderLab, as you know, Jim, is it's not to, this is not to hit the ball out of the park. It's to survive and create sustainability and proof of concept and process. So we are building a foundation of market understanding and risk management and market mechanics, understanding risk management, triggers, trailing stops. So the first metric is, what is the probability on any specific trade we have isolated and identified to get risk neutral before taking a full stop? If that metric is positive for each specific trade that we've isolated, and that's called vetting, then we have a business plan that we know we have an edge. First piece. So let's say it's a 3-point stop. You start out with a 3-point scale. Because let's say you have I'm making a number up, 65 or 68% probability of getting scaled before a full stop. That tangible aspect that we create with vetting over a large distribution of random interactions. Don't forget, it's all random. If we actually have edge, most of the time we're going to get risk neutral. And of course, the other times we take a full stop. So we're proving the concept. Now, the important part of a metric or something tangible is to manage emotional stimulus, fight, flight, FOMO, fear, looking for certainty, all those wonderful things. When you have something tangible, you are now better able to manage emotions. If you don't have tangible, all you have is emotions. And we are wired, because this is always uncertain at the hard right edge, to avoid risk. Are we going to get run over and shot? Are we going to get hit by a bus? Let's be sure. So we don't execute when we should because of that fear of loss. And our primal wiring cannot differentiate between this, a stop, and the saber-toothed tiger or getting run over by a semi. It doesn't know the difference. So it's going to overwhelm your intention, and then you're going to wait. And then when the market moves away from you, then there's your sweep, by the way. If the market moves away from you, then it's FOMO and you jump in. Well, you would have been risk neutral if you would have entered at the right place, but you weren't certain. Now you're taking the same trade, but maybe you've doubled your risk and you've already obliterated your edge that you might have had. So that doesn't work. But because we only have emotions, it's going to overwhelm because of our fear. I'm also fearful all the time, Jim, as you know, because I'm wired for fear. But because I have statistics, it's tangible. So when I experience the fear, it's pretty much, thanks for trying to protect me, but no thanks. Now I have my edge. That's what I can touch. I cannot, my fear is just built in, okay? And the randomness. So I don't know the outcome either. I see the sweep. What do I know? I know there were buyers here, and I know I got my stops, and I know I have my all-time high. Now, if I have a sweep and I have stops under here, and now my buyers were here and I don't take these guys out, I could just take the trade off. Now, you guys are going to say, well, why don't you hold it? How about this? It doesn't matter, because now it's time frame and trade plan. Where do I know it was too low? It'd be back here. You want to give all this MFE back? 10 points? Well, you're going for this. You might need to. So that's not my thing. So my thing is I just take chunks. Chunks, chunks, chunks. And I don't worry about buying the low, selling the high. It's just not material to me. I am continually looking to trade rotations. So this is a rotation. This tells me the rotation. The other thing is, I know this. And I know if here's what I posted in TraderLab, I think. Can't remember anymore. I can anticipate a rotation ahead of this. And then if I pull back, pop, and then whatever happens up here, we're in, we've just launched into orbit, maybe, but also it's Friday. Now here's the possibilities. A neutral extreme day where we trend, or we break out, get profit taking, and then because it's Friday, we get the profit taking. Now, again, I don't know. Let's watch the behavior. This is the last area, right? For longs. This says counter rotation. Where's the last area for longs? Here. Your stop could be under here. 10 points. You all right with that? Only you know the answer. I'm not referencing you, Jim. I'm referencing the question about what do you take off. When you're building the plan, you want to get very mechanical because you're looking for metrics. This is not about profitability. That comes later. You've got to build it. Everybody, you got to know where your trades are, and each trade needs to be isolated, and you have to define specifically the parameters that qualify the trade. Then you've got to measure it, the scaling under those conditions, so you can get risk neutral, and then the trade management process or the targeting or combination, and over iterations, minimum 50, preferably 100. And that's the work, and you only need one trade for proof of concept. And then you start building your business one at a time. That's the work. And you're going to be in such a hurry for the dopamine fix, you're going to go back to playing your video game, and you're on your way out of business. So it's okay if you do that. It's like going to the casino. When you go to the casino, just think about it. You sit with the other folks at the table, and the dealer plays a game that has an edge, and they play it exactly the same way. They don't play other games at that table. They don't change the game at that table. If they pay one of the gamblers $100,000, they don't, if it's blackjack, they don't deal 10 cards. I always use this example. They don't skip the next hand. But what control does the house or the dealer have? Only playing the game exactly the same way, because it has an edge that favors the house. And they accept the random distribution of outcome. Why is that? They don't control the cards coming out of the deck. They don't control how the gamblers play their cards. It's the same as us. We don't control anything except up to the point where we click the mouse. Then it's all random. So it's about the edge. So the gamblers play, they have winning hands. But over time, in spite of that cost of production and overhead, which is how you need to look at it, not win, loss, right, wrong, the house extracts the dollars in a random distribution of outcomes from those gamblers, and they don't change the game. Because of our emotional states, our fear, looking for certainty, being attached to the last trade, so we skip the next one, you take a stop, now you're going to manage the next trade randomly. We have a failure happening right here. You can see it. Now, failure means counter rotation, okay? And we go out of business doing that. Professional traders don't do that. If you want to create a career in this, you're going to have to realize and understand why other traders fail. And if you're not successful in spite of random winning trades, just like the gamblers have random winning hands, you got to step back, in my opinion. That's my suggestion. Of course, you don't have to do anything. Many of you are gamblers, and the dopamine is an addiction. The other part is the fight and flight and FOMO and all the emotional stimulus is always making havoc with us, so we can't control ourselves. The control is going to come from trade plan, vetting, and learning this business. If you're interested in that, that's why I created TraderLab. And it doesn't mean you'll ever become a successful trader or build a career. But I will say there are traders in TraderLab who have. So this business, I will tell you, I've been doing this 47 years. I've trained other traders. I've coached many traders over the years. I ran a trading desk. I had my own company. And I've done everything you've done and worse, I'm going to say, because I had no clue at all. There were no computers. There was no internet. There was no information when I started in 1980. So I you might say, came up through the ranks and paid dues that nobody should pay because there was no information. So you have the other problem. It's not a blessing. You have all the influencers and, of course, educators. And our rationale is, well, I got something out of it. Maybe what you got out of it is nonsense and not really transferable into consistency and sustainability. And I can't say you did or you didn't. What I can say is if you don't have a sustainable process and you're not profitable at this point, then you have to take a look inside. You have to say, if you're doing the work, and you see at the top of the stream what I laid out, that's work. But the work part of it is anticipating, having a process, understanding how the market works and what it might do and where it might do it. That's as deep as it gets. What it will do, I'm clueless. But I can tell you absolutely I'm not ignorant. So because I understand market mechanics and where behavior might happen, now I have tools that give me suggestions of behavior. Order flow, sweep suggests the potential for counter rotation. This suggests the potential for continuation. I got my fuel here and I've got all-time high. My trade plan for the day, as you remember, was new all-time highs. Is it going to get there? How's it going to get there? Great question. I could not tell you the answer, except this was our target, which we got, and now we're, as they say, flirting with the new all-time high. This is the Acapulco cliff dive that I referenced that gave us the shorts to be trapped. We got sellers in the morning down here, which created the squeeze right up into our target level against the low volume area. And this sets up the squeeze, the squeeze, the squeeze, and the tease. Hope you got something out of this, guys. Please give a like. Hope you enjoyed the stream and that you're getting something out of this. If you're interested in the business of trading and maybe creating a career path, there's no quick fix. This is a very high-level process because we're competing against other retail traders. And as you know, the failure rate for them is very high. Ask yourself why it is. Ask yourself if you're doing the processes they do. And then ask yourself if you're waking up in the same place, that maybe you want to take what you've learned, but not keep repeating the class. Your call, but you have an open invitation to TraderLab. TraderLab's for everyone. There's no cost. You can use the link in the bottom of YouTube. It's a terrific community. Remember, it's about the business of trading. It is not romper room. It's for traders who want to create potential sustainability. Don't forget to leave a like. Review yesterday's stream to see how this all came together to set up today. Okay? Thanks, guys. Please give a like on the way out. I appreciate you visiting me today in Costa Rica, and I look forward to meeting you guys soon in the TraderLab. Thanks again, guys. Have a super weekend, and review the other streams if you want to see how this actually works.